Hi everyone and welcome to the channel. Today we are gonna discover the secrets hidden in the numbers, most notably in all those figures presented into the financial reportings. But before we get started, press the subscribe button down below, the thumb up to give a boost to the channel and the bell to remain updated to our latest financial contents. And now let's begin. Picture this. Maybe you are just interested in to know the financial health of a company, or you are just curious about a potential investment. Where do you turn? Well, the answer lies in the treasure trove of accounting documentation known as financial statements. Financial statements ain't just dry numbers on a page. They are powerful tools for both stakeholders and shareholders. And maybe you are even one of them, so pay attention. Financial statements are like the company DNA, revealing strengths, weaknesses, but also potential growth. Let's kick things off with the management reporting, also called management commentary. Think of it as your backstage pass to the company performance insights, including a sort of insider information, forecast on the trends and the goals of a company, giving you a clear direction on where the company you would like to invest in is heading to. Clear. That is pretty damn cool. So the management commentary gives you the possibility to see the company with the eyes of the board, putting you in a position of avoiding looking at numbers bopping up and down on a chart without any tangible meaning and any possibility for you to control it. That's clear. Next up, we have the balance sheet. That is basically the representation of a company in terms of asset and liability on a specific point in time. It is the snapshot of a company that tells you where the company stands at a glance. It is like peeking into the company's wallet and see how much cash they've got. And for this reason, it is of foremost importance to understand what are assets, that are basically all items that allow a company to generate income, and what are liabilities, that are those items that detract cash from their pocket. The difference between asset and liability is called net asset value, and is ultimately what remains in the pocket of the shareholders. Then there is the income statement, laying bare the company financial wins and losses. So revenues minus cost equals gross income. Easy. Of course, this is a starting point. Then to know more, let's follow also lesson number 2 that we will publish very soon. Let's move on. Now take note, because you don't have to forget the cash flow statement, showing you the cold hard cash moving in and out. Because let's face it, cash is king in the business world, and having an empty pocket is basically a silent declaration of default. To have a juicy understanding about the financial figures that we read in the P&L, balance sheet and cash flow statements, there are the notes to the account. It is basically cracking open the company secret playbook. Just in case a company will try to hide something, we can have an understanding exactly by looking at the notes to the account. And here there is a very little margin for interpretation. We can find the blunt truth, stripping out the management narrative. To conclude, we have the last 2 documents that are the Auditors report that certify that the accounting reports have been drafted according to specific reporting standards, notably IAS, IFRS or NGAAP, that is critical to ensure level playing field across the board, but also the corporate and social responsibility statement, showing that the businesses aren't just about profits, but also about having possibly a positive impact on the world. Now, to wrap up, why should you care about all this financial jargon? Because, as Warren Buffett said, for investors, understanding the accounting standards and the accounting reports, it is the job. There is no way to mandate it. You have to understand the company before even thinking about investing our money in there. Keep this concept in your mind.
The way you learn about businesses is by absorbing information about them, thinking it, deciding what counts and what doesn't count, relating one thing to another, and that's the job.
Understanding the financial statements then It is not just for number crunchers, let's say, or bean counters. It is for anyone who wants to make smart and informed decisions, ultimately aiming for financial independence without losing money along the way. Because knowledge is power, and without knowledge we cannot achieve anything good in life. Personal advice. So guys, we reached the end of the video. I would like to thank you a lot for staying with me until this point, and don't forget to press the subscribe button, the thumb up and the bell to remain with us also for the future. Hold on a second, now I have a question for you. Milton Friedman in the 70s defines the shareholder primacy above all, meaning that the only social responsibility of a firm is to generate money for its shareholders. Since they are the biggest financial risk. What do you think about it? Let me know in the comment down below. Cheers!